Hi trader, this is Chris from Elite Currency with another video on defining the trend, this time part 3b, and we're going to continue with defining the trend and dive into reversals. But first of all, be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only, and by continuing watching this video, you agree with this disclaimer, plus you're aware of the risk involved when trading. Alright, in the first part, part 3, we talked about trends. Now we're going to talk about retracements. The trending environment, of course, is when the moving averages are aligned and prices above it, for instance, in an uptrend. And you can see that that happened here. And here we have the green circles. Alright, those are areas where we have a clear uptrend, prices above it. But with the green boxes, right, we have the blue arrow pointing at them. Those two green boxes are a bit different scenario. They have a different case. Why? Well, because the price is in between those moving averages. Price is below the 21 EMA, but still above the 144 in both cases. So that means that the short term is also above the 144. So price is kind of like getting squeezed in those between those moving averages. And then it's up to the price. If it's able to break above the 21 EMA, we'll get back into uptrend. That happened here when you have the blue circle there. Price was retracing. And then it managed to break above it again and continued higher, and it got back into that uptrend. So it's kind of a pause. It's kind of a waiting moment. Can price get back into that uptrend or not? Or are we going to get bigger consolidation or perhaps a reversal? When price is caught in between those moving averages, it's a retracement, and we're not sure what the next phase will be. Sometimes it is a trend continuation. In this case, it was, but it doesn't have to be. Those bearish retracements within the uptrend are basically, this is how they look like. A bullish retracement within the downtrend obviously would pretty much be the same. Price would be in between the 21 and the 144, the short and long-term moving average. But, of course, price would be above the short-term and below the long-term. Just the opposite, obviously. Now, what is the difference between a retracement and consolidation is the fact that once the moving averages are starting to touch each other there and are on top of each other, that's when the consolidation starts. So this is still actually right in here on the left. That's retracement territory because the moving averages are not touching each other. Once they do, which happened here, that's consolidation territory. So all of this is consolidation territory. Look at this. They don't touch. Here, they don't touch. All right. So that's pretty simple. When the EMAs touch, that's consolidation. Right. Now what's reversal? Oh, by the way, I should also mention trend channels. Obviously, when you get a retracement, those trend channels will tend to break. You might get a lower low. You might get a lower high as well. Fractals could break marginally, like it did here, for instance. Those things could happen because you're getting a retracement. Those are not that scary if a channel like that breaks mildly because it's just a pause. All right. With the consolidation, obviously, you get a flat box like this with support and resistance being horizontally flat. And you get fractals more or less indicating a box like that, and just basically the trend channel will be sideways. For reversal, of course, there's something else going on. Not only are the moving averages short and long term touching each other, but in fact the long term or the short term will go to the opposite direction. So here on the left in the first example, you see the short term going below the long term, right? That's a reversal. We went from uptrend to downtrend. Here in the second example, you see the short term being dragged to the opposite side. So we go from a downtrend to an uptrend. But that uptrend didn't go too far. That can happen. Then you get point 3. Price is being dragged again from an uptrend to the downtrend. But didn't go too far. Again, it can happen. And here again, upside and then downtrend. All right. Then we get a solid downtrend for a lengthy period of time. So as you can see, the trend itself changes as the price basically drags the short term below or above the long term. In not all cases, though, do we get a strong trend. This was a strong trend. This was a very strong trend. Here was very shallow. We're at the green arrow. This was very shallow. So we got two shallow examples, two good examples, and in fact, this one maybe doesn't even count that much because the moving averages are quite close to each other there. All right, the blue circle. So you see that the trend is of course important, but is not always everything. You need more confirmation. You need to know about other things than only trend to be able to trade well, but it is important. And if you do get a good trend, it's very great, like this part. So those are key things when the moving averages are crossed. That is a reversal potential there as it happens. Of course, also trend lines tend to break as well, right? And price basically breaking through those trend lines and breaking through fractals and making continuations on the opposite direction. All right, so those are reversals, trend lines, and moving averages. If you're interested in Admiral Markets webinars, take a look at admiralmarkets.com/education/webinars. Click on Education tab, and you see the entire lineup, week in and week out. We got great webinars scheduled. You might also want to take a look at the MT4 Supreme Edition, 60 extra features to make your trading life easier, and also the Admiral Market Web Trader that uses browsers. And if you're interested in starting an account, you can do so directly at Admiral Markets or through us, and you could qualify there for a moving average course valued at €890 for free. You also could be able to add credit to your trading account for Elite Currency. And you can order through us whatever indicators you might find interesting or strategies. Wish you all good trading and see you soon. Cheers.